Anyway, I think it's just important to have a thesis, to know why you're making your investment decisions, and to have convictions in your trades. If you don't have convictions in your trades, you can't hold through those bumps and undulations in the market. And you also don't want to be just blindly buying into positions because some influencer said to do it or because you happen to like the company. You need to have a thesis that's backed by fundamentals and how you see the macro. And you also need to be flexible to adapt that as the world changes, and know that you could be wrong, or your thesis might be right for a time and then is going to shift. And you need to be ready to be flexible and move your investment decisions along with that changing landscape. So for me, my thesis has been that we are going to see a bigger correction, but I didn't think it would happen for another 12, 18, maybe 24 months. And that's based on the 18.6-year real estate cycle. The U.S. is mounting debt problems and things of that nature. And I'm still leaning towards that thesis being correct. But given this tariff concern, I'm also starting to give in the back of my mind a 10 to 15% weighting to the idea that maybe the bull market is over. That's not my base case. However, I want to be flexible and adaptable, and I'm training myself to entertain these ideas that go counter to what my thinking has been that has made me successful over the last couple of years. Now, I still give more weight to my primary thesis, since deals could be struck to make this tariff thing go away. Monetary policy is easing. We're seeing that money printing is going to start in China, and we've had loads of liquidity floating into the system globally. So I still give my base case a greater weighting. However, as things shift and evolve, I want to be ready to adapt.